If you manage between 1 and 10 short-term rental listings, owner payouts are usually the part of the business that creates the most stress. And it's rarely because the math is complicated. It's because of the responsibility, timing, and potential risk. You're handling money that belongs to someone else, and you want to be sure you're doing it right. Not to mention, you're trying to get it done as fast as possible, all while fielding questions from owners about where their money is. That concern and stress is completely normal at this stage. Owner payouts are where bookkeeping, compliance, and trust accounting all come together. When payouts are clear and consistent, a lot of other things in the business start to feel easier to manage, even beyond bookkeeping. That's what this video is about. Let's level set what an owner payout is, because this is where things often feel more complicated than they need to be. At its simplest, an owner payout is the end result of the process of collecting rental income, subtracting the agreed upon expenses and fees, and sending that remaining amount to the property owner with clear documentation. That's it. There's nothing inherently complex about that process when it's handled correctly, documented, and not left to the last minute. But, of course, as with anything in the STR industry, nothing is quite as simple as it appears. Where things start to get messy is when parts of that process are unclear, rushed, or living only in your head. Here's the most important thing to understand. Not all the money that hits your bank account belongs to your business. Some of it belongs to owners, some to the government, even if it passes through your account first. Your role as the manager is to track that money accurately and move it to the owner in a timely and documented way. Let me walk you through what this usually looks like in real life. A guest stays at the property and pays Airbnb. That money lands in your bank account, hopefully one designated as your trust account, where all deposits land. And of course, since this is Airbnb, it could be mixed in with other deposits for other reservations at other properties. But at the end of the month, you prepare the owner statement, income, expenses, management fees, and the owner share. Once that statement is finalized, the accounting part is basically done. Now you're just paying someone what they're owed. You look at the statement, you see the amount, you send the money. There should be a clear, easy to audit line from guest payment to the owner payout. If that line is hard to follow, that's usually where stress starts creeping in and where owner questions pile up. So, how are owners commonly paid at this stage? This is the part most managers want spelled out. At the 1 to 10 listing stage, there's usually a few ways this happens. Some managers log into their business bank account and send an ACH transfer. Some might use their bank's bill pay feature. Others might use Zelle or Venmo early on because they're fast and familiar, especially before things get more formal. All these can work, although we don't recommend Venmo for owner payouts for too long. Stick to an ACH payment from your bank or from QBO if you're using that. What matters more than the tool is this: that money comes from your business bank account, the payment matches the owner statement, and you can see when and where it was sent. Can't tell you the number of times we've onboarded clients. They've given us their prior month's owner statements. We can't actually match them up with the payments in the bank account. If all those things are true, the method itself matters a lot less. As you start to mature, dedicated payable platforms start to make a lot more sense. One thing that surprises a lot of managers is how early payouts start needing structure. At 1 or 2 listings, you can usually keep things pretty manual. But as you get closer to that 10 listing mark, there's more money moving around, more owners involved, and more timing to keep straight. And that's usually when payouts start working better with some kind of system behind them. That's why tools like TopKey, VR Trust, and Clearing exist. They're built to help once things aren't simple anymore. Some managers use those tools directly. Others keep their setup simpler, but bring in help to manage payouts. Either way, the goal is the same. You want those owner payouts to feel steady and predictable, not like something you have to double check every time. Another thing managers tend to overthink is timing. Should you pay your owners per stay, monthly? Should you pay them when you receive the cash or when the stay occurs? Again, keep this simple. Monthly payouts are industry standard, and you shouldn't have to deviate from this. You should pay in arrears, which means that you pay the owners for activity in the prior month. This gives you time to account for expenses and reduce mistakes. Most homeowners really care more about knowing when they'll get paid, and predictability goes a long way towards credibility, especially when you're starting out. Additionally, I strongly recommend paying owners based either on the check-in or check-out date, as opposed to the cash received date. If you go with the check-in method, for example, every reservation with a check-in date during the past month would be on the owner statement. This means you don't need to worry about tracking multiple payments for a Verbo reservation or worrying a guest will cancel and you'll need to refund money you already paid to an owner. Here's a simple way to sanity check your payout process. If an owner can look at their payout statement and understand it without you needing to explain it, your process is working at this stage. If they can't, that's usually where questions, stress, and follow-ups start. If you're really getting a lot of questions, make a simple Loom video that walks them through that process. That can go, again, a long way towards alleviating some of those questions. So let's talk about where owner payouts go off the tracks. Most payout problems don't start as big mistakes, they start as small shortcuts. Paying owners from the wrong account just this once. Sending money before every booking has been reconciled. Not keeping a clear record because, I'll remember it later. In practice, what this looks like is an endless stream of adjustments in the following month to fix errors that the owner flagged after reviewing the statements. Nothing destroys confidence like having to claw back money the owner thought was theirs. These issues usually come from system gaps, not bad intentions, and the good news is system gaps can be fixed. So this setup works for a while, then payouts start taking longer than they should. All of a sudden you're missing date night or kids' game because owner statements have to get done. Believe me, we do over 2,500 of these a month. I get it. You start thinking you'd rather be doing anything else other than this. You start taking shortcuts, not ensuring all reservations are fully paid, missing expenses, and now your bottom line is impacted. That's usually the sign the system has outgrown you. This is one of the most common places we help at Keystone. We handle the bookkeeping, produce clear owner reports, and manage bill pays so owner payouts are consistent, documented, and easy to explain. Not because managers can't do this themselves, but because this is often the first thing people want off their plate once there's enough going on. If you're automatically rejecting any plans in your personal life during the first 5 days of the month, that might be a sign you need help. So if you're managing 1 to 10 listings, this is what owner payouts are supposed to look like. Clear, consistent, explainable. In the next video, we'll break down which short-term rental fees you should be keeping as the manager, which should be passed through to owners, and how to structure those decisions so they're clear, easy to explain, and set you up to scale.